Today we're going to discuss how to retire with a $50,000 income producing portfolio and what to do in today's landscape when so many companies are cutting their dividends to maintain your portfolio income. Stay tuned, we're going to talk about all of that next. Hello everyone, my name is Paul Zachary Shelton Jr. and I'm the Chief Investment Officer of Warwick Shore Advisors. We are a wealth and investment management firm located in Orlando, Florida with clients all across the United States. If this is your first time coming to my channel or seeing one of my videos, I ask that you please hit the subscribe button, please like this video, and please share this video to help me increase the financial literacy of our globe. Before we get into today's topic, I want to offer you a free financial planning cheat sheet. This cheat sheet will give you a financial snapshot of where you are currently in your financial health, and I'll also throw in a free asset allocation that you can use to invest in today's current market environment. So although today's video is geared for everyone, there's going to be some special notes for our retirees out there. There is a lot of data and a lot of information to support the fact that Social Security will not be able to provide financial security for many people. Within the next 20 years, more than likely, the Social Security trust will be completely depleted. So therefore, many of us, retirees or non-retirees, anyone that's looking for a portfolio income, any yield from your portfolio, these are some of the things that you should be doing and focusing on to make sure that your portfolio is able to provide you with the income that you need as you enter into retirement, or if you want some additional passive income right now. In the wake of the current coronavirus pandemic, many S&P 500 companies have either suspended or fully cut their dividends. So what happens to your portfolio when your dividends are cut? There are two things that typically happen right when your dividends are cut, and they both hinder your income and your wealth potential. The first thing is very explicit. Everyone knows that whenever companies cut dividends, it reduces the amount of yield or the amount of income that your portfolio derives on a quarterly and annual basis. Additionally, this reduction in income hinders you from having more money that you can reinvest when many people reinvest their dividends into the market to generate more income. Thus, this reduces your overall wealth potential. Secondly, many institutional money managers of mutual funds and ETFs that manage mutual funds or ETFs with a mandate of dividend paying stocks are required to hold investments within those portfolios to have a certain dividend yield. With so many companies cutting their dividends right now, many of those companies that are traditional to portfolios and a lot of those investments are no longer meeting that requirement. As such, those institutional money managers, portfolio managers, and mutual funds and ETFs all across the globe are having to sell those investments to make sure that their portfolio stays in line with this mandate. As this takes place, there is downside pressure on those particular stocks that we love so much, those stocks that provide the income and the value. So in addition to losing the income to your portfolio, you're also suffering from return risk when your return is being sold, or I should say your asset in that portfolio is being sold in large masses by many mutual fund companies. So in addition to losing your income from the portfolio, the overall return from the portfolio is diminished significantly. This is something that we saw when Kohl's, Carnival Cruise Lines, and Invesco all cut their dividends or suspended their dividends after dismal first quarter earnings. One large company that's in every mutual fund, it seems like, out there, and that is in many indexes, is Boeing. They cut their dividend, or I should say suspended their $8.22 dividend per year indefinitely. Now, this suspension of Boeing's dividend is significant not only just for those that explicitly invest in Boeing in their portfolio, but for anyone that has a 401k, a 403b, or any retirement plan that is sponsored by your employer. More than likely you have an allocation to Boeing, and a lot of your return and income from your 401k or retirement plan was also deriving income from Boeing. The Boeing dividend alone accounts for $4.6 billion in annual income to investors that is paid out every year. That is staggering. That's a significant amount of income that your portfolio and many portfolios around the globe that have 401ks are going to lose. One of the largest holders of Boeing stock is Vanguard. They will potentially lose $335 million of income that will be disseminated out to all of its investors with Boeing suspending its dividend. And this is just one company. Additionally, it doesn't just affect the investors of Boeing, it also affects the employees. Many of Boeing employees are part of their pension plan, which makes up about 5.4% of the holding of all Boeing stocks. This lost dividend will cost workers of Boeing approximately $250 million a year in portfolio income. That's just in 1 year. Now you think about the compounding interest of reinvesting that dividends in your pension, and then that significantly reduces the amount of money or amount of portfolio wealth that you would have over time. So how much money do you need to invest to generate $50,000 of income a year from your portfolio? I'm going to give you some numbers on just that coming up now, and there's going to be some assumptions that we should take into consideration. We're going to assume that we have a portfolio yield, and this is for your whole stock portfolio, of 2.5%. Now I know many of you are more risky and lean towards more growthy stocks and have a lower yield than that because you have a growth orientation. And then there are some investors out there that have more of a value orientation. So therefore, your portfolio yield may be significantly higher than this. So we'll just go in the middle of the line, say 2.5%. Additionally, we'll also assume that there is no fixed income or no alternative investments and no REITs or anything like that in the portfolio. So this is just strictly based on the stock allocation of your portfolio. So if you're looking to derive $50,000 in income on your portfolio and currently are yielding roughly 2.5% on your portfolio, you will need a value or portfolio overall value of $2 million to do that. However, with stocks dropping in value and many stocks dropping, or many companies, I should say, dropping their dividend or reducing their dividend, this is a hard feat to accomplish the 2.5% yield. However, if your portfolio is fully diversified or at least diversified somewhat and takes into account an allocation of fixed income and real estate investment trusts, this is very possible for you still to maintain this yield in your portfolio, still reaching your income goals. So next, let's assume that you break up your investment portfolio and add in 40% fixed income and a 10% allocation to REITs, real estate investment trusts. These particular investments typically pay a larger income or dividend than stocks essentially themselves. I did a video recently about real estate investment trusts, and you can watch that video. And in that video, I talk about how there is a mandate for most of the income from REITs to be paid out to their investors, thus deriving a higher income. So with the 40% allocation of fixed income that's roughly paying a yield around 2.52% and a 10% allocation of REITs that's roughly paying about 3.41% based on index averages, you're going to derive an overall portfolio from this yield from your portfolio of 1.341%. Now this is just based solely on the fixed income and the real estate portion of your portfolio. Therefore, you can take on a little bit more of the brunt of the suspension in dividends and the cut in dividends and still maintain your overall portfolio yield. So on that $2 million portfolio that we mentioned earlier, the fixed income allocation that is deriving an income of 1.341% will provide you an income of $26,836. This gives you an overall portfolio yield from fixed income of 1% and 34 basis points from the real estate portion of your portfolio. On a $2 million portfolio, this makes up $26,836 of the $50,000 income needed. Now you only need to derive an income of $23,164 or a yield of 1.15% from your stock portfolio. This is something that is still very doable in our current economic environment that we are in right now. If you have any questions or comments about anything that I mentioned before, please leave a comment below. Please reach out to me directly at investments@warwickshore.com. And I always ask, before you leave my channel, please hit the subscribe button, please like this video, and please share this video to help me increase the financial literacy of our globe. Thank you so much and have a great day.